I'm Pratap here. Today is 25th October 2023. So let us generate demand and supply zones. Even before that, let us look into the high liquidity zones generated during our yesterday's report. So we got excellent profits from high liquidity zones, right? Okay, even before that, look into Nifty chart. Today I explained pro gap in supply demand zone price action training. Did any of you attended that lesson? Especially the last 10 minutes of the session, I discussed about the strategies related to the pro gap. Look into this Nifty. When prices reached the pro gap, see the push, the recent push. How powerful this pro gap at 75 minutes time frame. Now still Nifty is going down and down. Even today, the weekly demand zone is broken. It looks like it is violated, but there are two more candles need to be completed on Thursday and Friday. But at least at this point we can say this weekly demand zone is pierced. That we can confirm. If it is violated or not, we can confirm by end of the week, that is on Friday. So this 125 minutes is completely broken. We can delete that. Still, I am keeping this weekly demand zone because we need to confirm. We are yet to confirm it is violated or pierced. That we can confirm on this Friday. And let us look into the trades. We got excellent profits. Probably today is the day you need to understand the real power of high liquidity zones, especially the demand zones. See how bearish the market is. Even yesterday and today, we haven't seen any of our trades disturbed during these 2 days. Yesterday, of course, we didn't get any trade execution. There were two high liquidity zones were broken yesterday, but they didn't have any fresh zones. Inside a high liquidity zone at lower time frames, especially in 75 minutes time frame, we didn't find any fresh zones. We already learned if we don't find any fresh zones, that high liquidity zone will be broken easily. So that way, high liquidity zones were broken yesterday for two stocks, but none of our trades are disturbed. But today is even a much better day. We got excellent profits. We got one stock, one high liquidity zone is triggered today, which has given excellent profit. But I want to show you all the high liquidity zones generated in our yesterday's report, especially high liquidity demand zones. Why I want to show, see the market, how bearish it is today and even yesterday. Even then, they didn't give any impact on our high liquidity demand zones. That is the reason why, just to make you understand that point, I want to show you all the stocks that is generated yesterday, even though all the zones did not triggered. So let me start with Bata India, which is not triggered, but I want to show you something. This is Bata India. This is the high liquidity zone, the drop base rally. It is a fresh zone. And high liquidity zones, especially, they are fresh, they are very powerful. Most of the times what happens, if your high liquidity zones are fresh zones, most of the time prices, when they just reach before into this zone, there will be a huge push. In day before yesterday's video, I explained entry buffer. Do you remember? The entry buffers plays the major role. Even here, the entry buffer played the role. It entered into the entry buffer. See the push today. It reached, the price reached up to its immediate EMA 20. This is the EMA 20. Prices were moved up to the EMA 20. Later again, from there is a rejection. So that means there is an entry buffer just before this high liquidity zone, and which is a powerful. That's why price moved very fast till its EMA. If anybody would have taken an entry at this entry buffer, but how do you know there is an entry buffer? After your first price action only we can identify. So that way it is difficult for you to take an entry here because this is the first. Now it confirmed there is an entry buffer for this high liquidity zone. This is one important point you have to observe. I clearly explained the entry buffer concept on our last video, not yesterday's video, before that, the previous one. I guess the day before yesterday's video, if I'm not wrong. Okay, that way we didn't get an entry. If we would have got an entry, we would have got an excellent return during the intraday today. But nothing to worry. But we got an entry in the next stock. See, at present I'm talking about demand zones. These are all high liquidity demand zones. We should not forget this point. And one more point I would like to tell you. Today's market is a bearish market. Even the market is bearish. See the power of these high liquidity zones. Okay, the next stock, the one we got, an excellent entry is ICICI Prudential. It is not a fresh zone. ICICI Prudential is not a fresh zone. But still, how it worked. See, ICICI Prudential, already we got one entry, deep entry previously in this candle. Look into this candle. There was a deep entry. So what is the rule? We have to go even more deep into this. We should take an entry. That is one rule. Or if you find any fresh 75-minute zone within this high liquidity zone, we can take an entry. Earlier, this whatever the deep entry happened, there was a huge rejection. Institutions created a new zone here inside this. In which time frames? Lower time frame, that is 75 minutes. Now this is a daily high liquidity zone. What is our strategy when we are dealing with high liquidity zones? We go one time frame lower. If it is a tested, we take a deep entry, or if it is having a fresh 75 minutes, newly created fresh 75 minute zone, we will take an entry on that because the 75 minutes is a fresh zone. So as per that, I'm going to the 75 minutes time frame. Inside this 75 minutes time frame, this new drop base rally is created. This is a drop base and rally is created. This is at 75 minutes. So I have fine-tuned to the entry near to the zone high. Just little below that I have fine-tuned. The reason is as per method to proximal line entry, which is almost close to this zone high, the daily zone high. But the stop loss is, this is the stop loss. This is because this is a drop candle, the stop loss should be at the low of drop base rally, whichever is having the lowest, that should be our stop loss. If you add stop loss buffer some more below, you have to adjust our digital line. But anyway, that is not important at present. See how beautifully it is executed today. Look into this. This candle reached this 75-minute zone here. Here we got an entry. The place where I placed the location where I placed the mouse. See the hand symbol. There we got the entry, and after that, see how well it reached the target. This is the 75 minutes target. Actually, we got all our short-term return within one day itself. 75 minutes to 75 minutes is not a intraday. It is a short-term trade. We got a short-term return within the same trading day. Let us go to one more time frame below to get clarity. It is 15 minutes. See, in this candle, okay, one point you want to fine tune your target to 15 minutes, but 15 minutes is also showing this inside this 75 minutes supply zone. That means even if you want to take an intraday entry, still this 75 minutes only the target. We don't have any 15 minutes zones in between. Between this 75 minute supply zone and the 75 minutes demand zone, we don't have any 15 minutes supply zones. That's why when by the time price reached here, again moved and reached the target. You know how much profit it has given ICICI Prudential during the intraday. When we first of all, when we got this entry is triggered in which candle? It is at 9:15 candle, but actually it is not 9:15 candle. Go to the 5 minutes, you will get clarity. This is 5 minutes. We got this. The entry is at even 5 minutes also we don't have clarity. Go to the 1 minute. Just want to tell you, generally we avoid entry at 9:15 candle. We got this entry at 9:17 in 9:17 candle. Why I'm saying 9:15? 9:15 sometimes some fake trades will be executed. Fake trade means it has a different definition. Okay, let us don't get in there. Earlier also explained about that several times. So 9:17 we got the entry. And when it reached the target, 10:24 it reached the target. So almost within 1 hour it gave the return. You know how much return it has given? 14,325 rupees. 14,325, which is 9.6% return on the investment for one future lot. The future lot is something around 1,40,000 plus the future lot cost. And it gave 14,325 return, close to 10% of one future lot. Close to 10%, that is 9.6%. Excellent return. Not only this, one more thing also you have to observe. Again, it gave second entry at 13:15 candle. That means at 1:15 it gave second entry. Because this is the second entry, obviously you have to go a little deep inside this 70 fresh 75 minutes. Because whatever here the orders are consumed onto this area. So definitely within the same day it will go a little deep. So little deep just below this candle, just below this 9:17 candle, I found one 5 minutes zone. So I have fine tuned to this 5 minutes. Actually, it is a 15 minutes zone, sorry, not 5 minutes. Let me go to the 15 minutes time frame. Here I found the zone, one 15 minutes zone, rally base rally. So there I want to take the entry, the second entry, because prices are reaching. So it took the entry. See the powerful within the same candle, within the same candle. Within the same candle, it reached the target. So to understand within how many minutes it has given the target. Let me shift to 5 minutes time frame. So here, this is a 13:15 candle it has given and reached in 13:25. Within 10 minutes, it gave the target. But what is the new target? We are not going for this 75 minute supply. The reason is now already created a new supply zone on 15 minutes time frame. Let me show you in 15 minutes. We have a drop, base, and a drop candle. Okay, this is pierced later. That is a different story. But our target is this supply zone because we have a new 15 minute supply zone. Again, it can push the price down. That possibility is there. But earlier, we don't have a 15 minute supply zone. That's why our target is at the 75 minutes supply zone, which reached easily. Our high liquidity zone pushed up to that. Now, the second entry, we changed the target. Do you know how much return it has given? It has given 9,000, sorry, not 9,000, 6,900. It gave 6,900 in the second entry on the same day. And which is equivalent to 4.6% return on the investment. 4.6% return. Earlier one is 9.6%. Now 4.6%. The total is 14.2% return on the investment we got on the same stock. That is the power of our high liquidity zones. And moreover, ICICI Prudential is an already tested zone. Even then, it worked very well. Second time, 2 trades it gave during the intraday. So this is what, that too, it gave these 2 entries on a bearish market, not on the bullish market. On a bearish market day, it has given this. That's why you people should understand why from the last 2 months, always I am saying we have to concentrate on high liquidity zones. Because I did a lot of research on this area. Especially S_DZ and R_SZ, that is support, demand zone, resistance, supply zone concepts. On daily time frame, they are giving good results when you fine tune them at lower time frames, that is 75 minutes and 15 minutes level. Today it gave excellent result on the 75 minutes level as well as fine tuning inside 75 at 15 minutes level. Because the 75 is already tested during the intraday. For the second test, we took a deep entry inside the same 75 minutes because it is an intraday. If it is not an intraday, we would have avoided this 75 minute zone because the tested once the lower time frame zones like 75 inside high liquidity zones, if they are already tested, we don't prefer them for our next trade. But within the intraday, yes, you can take, but you have to take a deep entry. That is what we did second time. We took a deep entry just below this candle. And moreover, the deep entry is a fresh 15 minutes demand zone. So this is about ICICI Prudential. And those whoever is following high liquidity zones, because some of you are attending these high liquidity zones and observing for the last 2 months. I'm sure some of you might have taken a trade in this. You would have got excellent returns today. Both together, it gave 14.2%. You got nearly 20,000 plus profit on these 2 trades during the intraday. And your investment is 1,40,000 plus. That is one cost of one future trade. If you would have gone for options, maybe your return, your investment could have been even less. So this is about the successful trade on the high liquidity demand zone. Let us look into the other high liquidity zones. 3 more high liquidity zones were listed yesterday. One is Indigo. Let's go to the daily time frame. So Indigo is already tested deep, very deep, but even then it didn't reach this zone. Maybe there could be a fresh 75 minutes created recently. Let us look into that. Yes, here a fresh 75 minute zone created and it pushed. See how deep. That means this fresh 75 minutes is working very well. And even here, just before reaching, again one more fresh 75 is created here. Drop, base, rally. And again that one pushed the prices up. That means institutions placed some more liquidity just before this high liquidity zone. I'm just showing you, okay, as per our rule, we'll be taking inside this high liquidity zone. We don't take trades outside unless they are high liquidity. For that, we need to look into 75 minutes time frame reports in our software to check whether they are high liquidity zones. Okay, time being we are focusing on daily. Let me limit my discussion to the daily. The point I want to tell you, our high liquidity zones are not allowing the prices to go down, even though the day is a bearish day. That is the point I want to tell you. And the next stock is Ramco Cement. So this is the high liquidity zone identified recently. See, prices are not, they're still did not come into this demand zone, even though today's market is bearish market. The reason is there could be so many pending orders just even before this demand zone. So by the time prices reach into this demand zone, the supply will be weakened and we can see a huge rejection from here. That way we get good profits. And moreover, it is a fresh zone, you should not forget. Sometime before we discussed, especially the fresh high liquidity zones, when prices are about to reach, they may face some kind of huge resistance. Resistance means not support resistance. I mean to say, from the general English word resistance. So supply is getting the resistance from the demand. That is what I would like to convey. Why supply is getting resistance from demand? Because this is a high liquidity zone. Just before the high liquidity zones, institutions keep entry buffers. In the entry buffer also, there will be very huge amount of pending orders. Those pending orders will push the price up before they reach into the high liquidity zone. If anybody did not attend the entry buffer concept, please refer the video couple of days back. I have explained clearly. So this is one we didn't get entry. The another one, last one from our yesterday's list is VEDL, Vedanta. So here, just before reaching this high liquidity zone, even Vedanta is getting the rejections from here. That means there is a stop buffer somewhere here. Entry buffer, not stop buffer, entry buffer. Stop buffer is related to stop loss. Okay, the entry buffer is there just before this, which is pushing. So by the time it reach this demand zone, the demand zones will definitely work. Because the reason is, by the time prices reach into this demand zone, these entry buffers, the pending orders in the entry buffer, will consume the entire supply. Once the supply is consumed, the demand zone will push the price up. So why I'm showing these stocks? The reason is yesterday and today the market is a bearish market. Everybody think, oh no, we should not go for long trades. We should go for short trades. That is what people tell. But today in long trade only in ICICI Prudential we got two trades, and that too how much return it has given? Amazing return. Our average intraday trade is 6.1%. But during the first trade, it gave 9.6%, and during the second trade, it gave 4.6. Both together, it is 14.2% return on the investment they have given. So this is the power of NeoStock's high liquidity zones. I've been telling for the last 2 months, every day I'm telling, they are the important. When they are working very well, we should focus on them. What is your conventional supply demand zone concepts tells? If the zone is not fresh, don't take a trade. But our ICICI Prudential is not a fresh zone. Still, we took a trade. It worked. That's why you have to understand every concept you learned in supply and demand zone concepts by using the old theory concepts. If you are still believing them, they don't work because the days are changed. When the days are changed, institutes also will play with us. They know what are all our weaknesses because they know what kind of concepts we are learning. They want to trap us. When they want to trap us, they will create some special zones, something like this. That is what we identified with the help of our powerful software algorithms. Okay, this is about uh, long trades, but short trades also we got excellent return today. Yesterday we got two. We identified two stocks. One is HCL Technologies. Look into this HCL Technology. Already prices went deep inside. When prices go deep inside, what you have to do? You have to take just above that. You need to find if you find any zone or any fresh, newly created zones, you can take an entry. Where inside this daily demand zone, we will find those zones at lower time frames. So we have to go to 75 minutes time frame. At 75 minutes, we found one drop, base drop. It is a fresh 75 minutes supply zone, and it is also created recently. And today we got an entry. But this is the, what to say, the risk is high. What I did, I have fine tuned at 5 minutes level because 15 minutes I didn't find any proper supply inside this 75 minutes supply zone. Inside this 75, I did not find any 15 minute supply zone. That's why what I did, I went to 5 minutes. There I found one beautiful rally base drop. And see, yesterday there is a drop base rally. That's why this demand zone is my target. Which one? This is 5 minutes because I'm taking entry at 5 minutes. I'm also fine tuning at 5 minutes to identify the target. It gave even more better target today, but okay, this is our immediately what we identified. See, and when we got the entry at 9:25 candle, we got the entry, and when it reached the target at 12:40 candle, it reached the target. So excellent return it has given. 17 rupees 55 paise profit it is given for each share, which is 12,285 rupees, one futures lot. We got a profit of 12,285 rupees, which is 8% return on the investment. So we got an intraday profit because 5 minutes we fine tuned at 5 minutes. At 5 minutes we got 8% return on the investment, which is an excellent return. If anybody would have taken this, you would have got an excellent profit during the intraday. And this has happened from our high liquidity zones. We found a fresh 75 minutes. Inside fresh 75 minutes, we fine-tuned to 15 minutes. But 15 minutes, I didn't find any proper supply. So I went to the 5 minutes. There I found excellent. See the risk and reward. Risk is very small, but see the reward. Definitely it could have been more than 1:10. Compare it to your risk and reward. You would have got 1:10, more than 1:10 trade. And it happened because of our high liquidity zones. And this is a high liquidity supply zone and it is a short trade. And there is one more entry we got, persistent. You have already seen persistent gave excellent return earlier, the same supply zone. Previously 2 times, if I am not wrong, persistent gave us profits. And today it is 3rd time. So persistent systems. Let's go to the daily time frame first because all these are all daily high liquidity zones. So this is a rally base drop. So this was the first time we got here. Second time I think recently we got in this candle. And today again 3rd time intraday it worked. So what I did, I went to the lower time frames, that is 75 minutes, but I didn't find any 75 minutes zone here. Today I didn't find any 75 minutes zone. Because this is a bearish market, I thought probably the nature of the market will work. So that's why I took a risk. What is the risk? 15 minutes time frame. Generally what we do, we take already tested zones. We always look for 75 minutes fresh zones. Either we go to the deep and take the entry, or any newly created 75 minutes we take. Inside newly created 75 minutes, we will fine tune to 15 minutes. That is our strategy. But here slightly I deviated the strategy because 75 minutes I didn't find any fresh zones. But why I want to take an entry, there is another reason. See here, there is a huge rejections from this area. That means there could have been a huge supply just somewhere in this area. The prices are reaching near to this location, going down. Again, trying to reach and failed to. Even today also it's trying to reach, enter into this area and it failed. So that's why I want to take a risk. And second reason, today's market is a bearish market. By considering these 2 factors, so I decided maybe we may get an intraday, not for a short term, intraday. That was my thought. And in 5 minutes, in 15 minutes, I found rally base. See, this is from here. I'm sorry. Look into this green color base candle. It is a base and then drop. So inside because the risk is a little high, so what I want to do is I want to fine tune. So I went to the 5 minutes because it is an intraday. Went to the 5 minutes. So inside this, inside this 15 minutes, again I found a rally base drop. There I have fine tuned as per our method to proximal line. Even if you would have adjusted, if you feel still this risk is high, if you would have adjusted the method 3. What is method 3? The highest body. So this is the highest body. Still you would have got an entry. Still you would have got an entry today. But most of the times we miss the entries, right? You would have got another 8 rupees return you would have got. But anyway, I have limited myself to this calculation. Because type 2 is the most recommended approach. As per that, I calculated. If this is your entry, it reached your entry at which candle? At 1 o'clock 35 candle it reached. 1 o'clock 35. And this is 1 o'clock 45. In just 10 minutes it reached the target. See here we have a rally candle, huge candle. This is a ERC candle, expanded range candle. So it is a legging, base, and again a rally candle. So this is the target. So here we brought, that means a short trade. Here is a short trade, and this is the target, this demand zone. In just 10 minutes, it reached the target. And 10 minutes, it has given 5,468 rupees 75 paisa profit it has given. And which is a 2.6% return on the investment. 2.6% return on the investment in just 10 minutes is not a simple thing. Even though 2.6% looks like a small percentage compared to our average return on the investment. Our intraday average return on investment is 6.1%. Generally, it takes 2 hours time or 3 hours time maximum to reach the target during the intraday, between 2 to 3 hours. But this one has given in just 10 minutes 2.6. So it's a very good return on the investment. So persistence, though, you need to understand how our high liquidity zones are working. And all the 2 trades for the short trades, HCL Tech and persistence. These are the 2 stocks we identified from our yesterday's report, both triggered and both successful from our supply zones. And when it comes to intraday, yesterday we found from our list 5 stocks. Out of these 5 stocks, only 1 stock we got the entry. Remaining we did get the entry. But that one stock gave 2 entries during the intraday. That is ICICI Prudential. So why I have been explaining these again and again is just to make you understand the power of NeoStock's high liquidity zones. Every day we are generating the reports to find the stocks near demand and supply zones. And these stocks are giving us excellent returns. And we have seen during the last 2 months, we have seen only 2 failures. That means 2 stocks hit our stop loss. 2 times only. First time I remember it gave around 2,500 loss, and second stock has given around 3,250 rupees. And both these stocks are, in both these stocks, one is a short-term trade and one is the intraday trade. But remaining all stocks, remaining all entries, maybe we would have got over 30 plus or maybe even 40 plus. I'm not sure, but definitely it is 30 plus entries we got during the last 2 months time period. If you look into our reports, what we analyzed, I'm talking about the reports I analyzed, because first 1 or 2 weeks I didn't analyze any reports. Maybe I think I'm analyzing only for the last 1.5 month or close to 1.5 month. Within that 1.5 month, whatever the stocks we are analyzing, that is next day we are analyzing, because I don't want to analyze the previous day, because I'm not a SEBI registered, so I cannot give you any recommendations. Generating reports is different. They are not any calls. You have to do your study and then you have to take your own decision. How they are working, their performance we are analyzing. So when for the last 1.5 month, whatever the performance we have evaluated, all the stocks, more than 30 plus stocks, gave successful returns. But how we got the success? For that, you should learn how to deal with high liquidity zones. That is what I've been explaining continuously in all my videos. First, you need to find high liquidity zone at daily time frame. That is the first step I am telling you. Second step, what? Go to the lower time frame, that is 75 minutes. There you find a fresh zone if it is already tested zone, or go to deep entry if it is already tested. That means already tested, we have two rules. Either you have to find any newly created fresh zone, or you have to go deep, compare it to the previous entry, and then you take a trade. These are the 2 points we are following. If it is a fresh zone, we have to fine tune near the zone proximal line. That is type 1 proximal line. If your risk reward permits, you will plan for the trade. So these are the points I've been discussing every time. If your risk management is not permitting within the 75 minutes, go one step below. Inside that 75 minutes, fine tune to 15 minutes level. So when you are fine tuning at 15 minutes level, either you should go for intraday or short term trade. Most of the time when you fine tune within the 15 minutes level, because it is a high liquidity, generally 15 minutes zones are short term. But because high liquidity zones these are all high liquidity zones, whatever you fine tuned, the short term return you are getting during intraday itself. That is what we have seen today for HCL. Even the short term trade on the 75 minutes, we got it. We got today itself for ICICI Prudential, because high liquidity zones are such a powerful. Generally, if in a normal trade, if you expect your return in 1 week time, in high liquidity zone, you are getting the return in 2 days itself. Or in any short term trade, if you are expecting 2 to 3 days return, if it is a high liquidity zone, that return you are getting during intraday itself. That is the power of the high liquidity zones we have been observing for the last 2 months time period. And today, why I am focusing more on this? I am thinking that at least those people who did not realize till now the power of the high liquidity zones, at least today you will realize, because today is a bearish market. Even yesterday and today it's a bearish. Even then, high liquidity zones did not fail. Especially the stocks near high liquidity zones did not fail. So this is the point you should remember. From the beginning, I've been telling you, high liquidity zones gives you around 80 to 90% success rate. The probability is 80 to 90%. Only 2 trades failed during last 2 months is not a simple thing. Normally, if you take a trade without following all these high liquidity zones, what could be the success rate of demand and supply zones? You might be knowing, because you've been using demand and supply zones for the last few years. But today, high liquidity zone concept completely changed our understanding, what we've been following for all these years. Okay, this is about uh, the stock analysis based on our high liquidity zones generated in our yesterday's report. Now let's go to supply and demand zone, top-down analysis, strategy builder. And here we will generate for daily time frame. So entry time frame daily, let us find the stocks which are near to the daily demand zone. So these stocks are near to the daily demand zone. So here we have some high liquidity demand zones. And one more thing, PSR zones you should not touch. Even yesterday also list, we found two PSR zones, IEX and IPCL apps. So I didn't focus on those stocks. Pierced zones are already pierced. So we don't look into them unless the pierced zone is a Nifty or Bank Nifty. So we got some other high liquidity zones. Focus on them. We have VEDL not executed today. We didn't get the entry. What else we have from this list? Indian Hotels is there, but it is pierced 5 times. But still it is working from here. But we don't get into these high liquidity zones. So that means we have only one stock. Escorts is there. It is an all-time high zone. It didn't have a supply zone. Already tested 3 times. So fourth time it is entering into this zone prices. So now let's go back. For entry time frame daily, let us find the stocks which are near to the daily supply zone. We found only 5 stocks. Are there any high liquidity supply zones? Yes. Torrent Pharma is there, but it is already tested 5 times, 8 rejections, not pierced. So either you have to take a deep entry or you need to find a fresh 75 newly created supply zone inside this high liquidity zone. That is only our strategy. So let's go back and find the stocks. Let us find the stocks closed inside the zones, inside the demand and supply zones. So entry time frame is the daily. Let us find the stock where price closed inside daily demand zone. So good number of stocks are closed inside the daily demand zone. Nifty Private Bank, Nifty Metal, Nifty Healthcare Index, Nifty FMCG, Nifty Midcap Select, Nifty Financial Services. So it's very critical. If all these zones are broken tomorrow, then you can see another red day. But if these indices are pushing the market up, probably we can see a bounce back. We don't know. We can't tell anything. Already Nifty weekly demand zone is broken today. So tomorrow is again another critical day, and also tomorrow is a monthly futures expiry day. Okay, let me scroll down. Oh my God. 80, 86 stocks price closed inside these daily demand zones. Market movement, tomorrow's market movement is depending on all these stocks. If their demands are strong, stronger than supply, again market will be bounced back at least for tomorrow. Otherwise, if these demands are broken, that's it. We can see a major crash. Interesting day tomorrow. Okay, let's go back. For entry time frame daily, let us find the stocks where price closed inside daily supply zone. Only 5 stocks are closed inside daily supply zone. So let's go back. Let's find the tested zones. Entry time frame is daily. Let us find the tested daily demand zones. Definitely the list will be big because we have seen many stocks closed inside the zones. How many zones tested today? This is the filtered list. So total 37 demand zones are tested today. Let's go back and find the tested supply zones. Entry time frame is daily. Tested. Let us find tested daily supply zones. So only 5 supply zones are tested today. So let's go back. Let us find the newly created zones. Entry time frame is daily. Let us find the stocks having newly created demand zones. So no demand zones are created today. You know the reason. It's a bearish market. So entry time frame is daily. Let us find the newly created supply zones. Definitely we might be having a good list. No, even supply zones also not created. Oh, only 9 supply zones are created. Generally what happens, if the new supply zones are created near the demand zones, if the supply is very strong, because the supply is strong, the newly created supply zones will easily break the demand zones. But see, nearly 90 stocks are having closed inside the demand zone. But there is no newly created supply. That means the possibility of breaking these demand zones is ruled out. But we don't know tomorrow again what will happen. If tomorrow so many supply zones create and they break the daily demand zones, that is a different story. So this is about the filter list. Now let me show you all the stocks for your reference purpose. Demand and supply zones for daily time frame. I'm generating. I'll keep on scrolling this list. Whichever the stock you want to refer, please pause the video and then you can study the parameters of stock. So this is the total list. Hope this information is useful to you. Let us all meet again tomorrow. Thank you for attending this video.